in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we are back. You are listening to the Financial Survival Network. Things are heating up in precious metals. Trends hard to get a beat on. But we've got David Morgan of themorganreport.com to help us make sense of the seemingly incomprehensible. David, welcome back to the show.
Kerry, thanks for having me.
Hey, so first, silver sub $20 yet again. And this is deja vu all over again, isn't it?
Yes, it's been a real grind. People probably tired of hearing me say it, but I think I coined the phrase, these markets will scare you out or wear you out. Certainly, this market has worn out a lot of people. A lot of people understand the fundamentals and the reasons for buying the metals that have bought them and probably at higher levels now just are worn out. This market's been basically in a dull cycle for the last 3 years plus since it peaked at 48 in April 2011. And a lot of people are giving up or, bought too much, wish they hadn't bought as much or bought lower or, whatever. So certainly it's dragging on. I did a study, real quick one, the last time we were under the $20 level, and only had like 5 to 7 trades. And then it popped up over 20, and then we did it again, and it was about the same. So whether this one only has, a few trading sessions like, 5, 6, 7, and then pops over 20 remains to be seen. But if that's the case, what it shows is there's pretty good strength down there. It means even with paper manipulations or the paper selling, that the people that really are on the inside track, people that really know what's going on, the people that demand physical for whatever reason, are very happy to buy at those levels. There's enough buying pressure to bring it up off that level. So I think the bottom's in still, but the very good, well-known types are making a lot of noise about, a huge, big drop in the not-too-distant future for both the silver and gold markets. I don't agree, but it's a matter of opinion at this point.
Yeah, well, it's interesting because obviously on August 14th, the institution of the silver fix ended. And what happened on that day? Silver took a 33-cent per ounce hit. But as far as I can tell, and as far as I can read, nothing else happened, David, right?
Right. I read it once, and I'm not, my memory's not perfect to cite what the new paradigm is, but it really hasn't changed that much. I mean, you've got the CME and Thomson Reuters in there, and they do it from, their computers, and it's like, it hasn't really gone to a free market is my point. And someone wrote me recently on, the member service and said, I read from, and I haven't read the article yet, but there was an article, I guess, on GATA's website that, this new silver price determination is probably as opaque and obscure as the silver fix was for whatever it was, 17 years. So I agree that, it's certainly not the best way to determine a price. I mean, futures markets are run by fiction. They're run by the amount of paper that you can sell or buy. And settlement for about 99 out of 100 is in paper terms. So you've got something that represents something physical like silver or wheat or corn or whatever. And the settlement, most of the time, only 1%, 2% comes off the commodities exchange. And so you have to have some physical commodity, be it wheat, be it rice, be it corn, be it silver. But the amount is very small. It's like fractional reserve banking.
Yeah.
Not
only worse.
Comes into the bank, only worse. People come into the bank and say, I want all cash. They'll take a check. It'll be electronic transfer. They don't have that many greenbacks in the bank. I'm certain everyone on your show understands that. But it's similar here. It's like all this, contracts that represent, substantial amounts of silver is all fiction. It's all just a number in a computer, really. And the threat, that people want. That, why doesn't somebody stand for delivery and show these guys up? And the answer is the rules don't allow it.
Right.
If you wanted to stand for delivery, the most you can take is 1,500 contracts. So 7.5 million ounces. 7.5 million ounces, when you mine about 750 million ounces, isn't very much, is it? What is it? It's about 1% of the market. So as I'm telling you, these things have gotten out of hand. Of course, the idea of a futures market, I'm actually favorable to. For farmers to hedge their product and speculators to take the other side of the trade, I think the intent initially was good, was sound, was fair. But now it's become a gambling casino, and it doesn't really allow true hedging from the real sense of the word, meaning it doesn't really adhere to what the original intent was. It's gotten so far removed from what the original application of it was that it's a farce of itself. Unfortunately, there seems to be enough physical in the metals markets to satisfy the small demand that comes through. And because of that, we haven't seen an explosion yet. But there are, problems. I mean, the gold market especially, where, Germany didn't get their gold, and that the bank in the Dutch bank, forget its name, they forced everyone to go to paper settlement, not to physical settlement, when their contract clearly was that they could get physical gold. So the problems are there, but not a big enough manifestation has come to the fore yet. But believe me, it's coming. And as Rob Kirby says, the day that China doesn't get a gold shipment that they paid for is the day that the dollar really starts to have a problem.
Yeah.
And the gold market really starts to move. And whether it's China or not, I don't know, but I think his point is very well taken. And they can only suppress it as long as there is enough physical for the 1% that actually takes delivery that will be satisfied until it isn't. When it isn't, that's basically when things are going to open.
Yeah, it's going to get real interesting real quick. And yeah, sometimes we don't really even know. I mean, there are numbers thrown around in the size of the silver market, David, that in futures derivatives, you see 5 trillion there. I don't know where that number comes from. Have no idea if there's any credibility behind it, what it means. I don't know, but there's something like really amiss there that makes no sense. And, you could just write these contracts, and doesn't seem like, as long as you can write them and pay for them if you have to, which you usually don't, then everything's fine with the world. But an interesting thing has happened now that the too big to fails have supposedly gotten out of the commodities industry, although they don't seem to have actually gotten out of precious metals, although maybe they have, and their function's been taken up by hedge funds. But you've seen, and it's been hypothesized by some, that the price of oil is actually going down because the short position in oil now is less than 3 days. Whether that's really the case or not, hard to know. You got to wonder what would happen if the short position in silver, David, was only 3 days instead of, I don't remember, as 185 the last time I looked at it. I just kind of stopped paying attention to it. It's so out of control.
Well, point's well taken. I mean, there's, again, the paper markets have the most influence on the price, but eventually the physical market will have the most influence on the price. And they don't want to lose control, believe me. They, meaning the CFTC, the options markets, the financial markets as a whole, will do everything that they can to keep this thing going. And, you look at the palladium market, we can talk about it. Palladium is something that we're pretty proud of. We look at all the metals, the other white meats, the other white metals, and we recommended in the Morgan report take a hard look at palladium at around the $700 level. Talked about some of the ETFs are out there. Very few stocks are involved in the palladium market. Of course, there's always the options and the futures markets, which we basically don't recommend for hardly anybody because they're so tricky. But and palladium's hitting a 13.5-year high. And, so that's good. Anyone that follows into palladium, I actually bought some physical around the 700 level. Very happy I did so. Certainly not silver only. I have some gold, have some platinum, and some palladium. And it's been a good one, but I want to continue on the palladium theme for a minute, because back in 2000, palladium went from the hundreds into the 1100. And the reason for that was physical demand. Ford Motor Company had switched their line of automobiles from using platinum in the catalytic converters to palladium. Palladium was cheaper, did the same job, and it was only $400 an ounce. And so they made a massive physical order, and it took the futures price from like the 400 range to 1,100. The margins were increased dramatically all the way up to the point where it got beyond absurd, beyond science fiction, beyond reality, where you had to put up 2 times the cash price per contract to hold a paper, where of course you could buy the physical for half of it. Mm-hmm. But that's what these markets will do, and this is the kind of lengths that these authority figure types will go to keep their paper paradigm in check or in control, or however you want to term it. So that's an example that I like to bring up when people say, well, they always have control, they never can lose control and all this. No, one company bought physical and they lost total control. Now, I admit that palladium is a far smaller market than the silver market, but I think my point is well taken. Especially, the problem that the authority types have is that there's so many people that are potential buyers of silver. It's not like it's a $1,300 an ounce item, it's mm-hmm. 20. Welfare recipients could buy an ounce of silver pretty easily.
Yeah.
So they've got kind of a problem if there's ever a silver rush. The old adage is there's no fever like gold fever, and that's probably true. But when the no fever like gold fever takes hold and people can't buy gold because it's now $3,000 an ounce or $3,500 or pick your number.
Guess where they're going.
They haven't ever seen $3,500 in their life. But they got $30 or $40 or $50. Well, they'll go buy silver. Silver's, mm-hmm. Second or gold's second cousin, and it'll happen. And when that happens, there isn't much they can do. They can change the rules and stop trading, and fix a price and say it's only going to trade at this level. But then there'll be 2 markets. There'll be the real physical market, and there'll be their phony paper market. That's probably what will take place.
Yeah, and that day is going to come. We thought it was going to come earlier, but like we were saying before, they just keep finding new ways to keep the system up. I read one story that in 2009, the trucks were ready to stop running, the food trucks, because they couldn't get letters of credit. So the Federal Reserve just stepped in there and backstopped all the letters of credits from the banks. They just said, issue them, we're behind you. And the trucks with the food, 3 days away, they were ready to stop running. I don't know if that story's true. Can't find anyone who will actually say that it's true. But, the system was in such dire straits and so close to freezing up, it certainly is believable,
Well, I think the point's taken. It could be fiction, but it's a good metaphor for how complex things are. I visit these very big cities from time to time, as you well know. Hong Kong, New York. And I always have kind of the same thought. It's like, how do they feed this many million people every day? And, people usually don't think of that kind of thing, but I do.
Yeah, I do too.
Like, my goodness, there are millions and millions of people in this city. And, I'm sure there's people there that are hungry, but they're hungry because they don't have money to buy food. It's not because it isn't plentiful, mm-hmm. but yet it has to be replaced all the time.
Yeah.
And, there's so many intricacies in that system, in the food chain, but no one ever really stops to think, something could break down, a ship could go bad, it could be a strike, it could be a labor strike, it could be, a mispricing, there could be a non-clearing bank wire, whatever. But, things just keep going along, and I'm glad that they do. I'm certainly not rooting for any problems.
No.
But the problems are manic throughout the globe, Kerry, as you well know. There's all kinds of literal people in the streets that are there because they're very upset under the conditions that we have, not only, well, some is for food, really. A lot of the Middle East thing, even though it's talked about from the mainstream press as being, political, a lot of it was, no, they're hungry. Their food prices have gone astronomically high, and they're mad as can be about it.
Oh, yeah. Yeah. When people are hungry and they don't see a way out, historically, that's when you see civil unrest And as Gerald Salenti said, who we had on the show yesterday, when people lose everything, they lose it. And, there's nothing new about that. You just have to read history if you're so inclined, and you see it happening over and over again. There's nothing new about this, David, And yeah, looking at the other metals, looking at gold and looking at platinum. Platinum's kind of a little bit behind palladium, isn't it?
Yeah, when we did our report, we spoke about palladium being rarer than platinum, and I didn't do it. I kind of wish I had, but spread trade is a safer trade than an all-on futures trade going long or short any given commodity. Spread is where you take two commodities, and you would be going long palladium and short platinum, and what that means is not that you expect platinum's price to go down while you expect palladium's price to go up. Spread says that you expect the price of palladium to go up faster than the price of platinum. That would have been an excellent trade. It's a lot safer. The margin is less. The margin calls are almost non-existent. They're a pretty good way to play the commodities markets. And that was one that, you could even do it now, really.
Yeah, it's still a good trade.
Yeah, palladium is on the march higher. Platinum will continue to move higher, but not like palladium. And when you think about it, if palladium is rarer than platinum and it's being used more often than platinum catalytic converters, why would it sell for less? And it does. So, and the thing that platinum has going for it is, name recognition. I mean, when you had the World War II situation and gold was basically outlawed to Japan, the Japanese went to platinum for their jewelry and wealth holding. And so platinum jewelry is fairly significant in the East, but it's it's a market. It exists. It's not a real big market. Platinum and palladium are extremely rare, much rarer than gold, and so again, very small markets, easy to manipulate. Really, if you really want to manipulate a market, you pick platinum, palladium, and like an example I gave. Inadvertently, Ford Motor Company drove the price. Again, physical does drive these markets at times.
Yeah. Well, the beauty is you can't manipulate them for very long because people do take delivery because it's used in the catalytic converter. You got to have the stuff if you don't want smog in Western cities, Yeah. And where does it come from, right?
Yeah, well, Beijing is just, horribly polluted. So that's why they're sure that these cattle converters on all the new automobiles that China's driving around.
Yeah, and it gets produced in South Africa and Russia, pretty much all of it, right? So,
well, platinum is South Africa. It doesn't do much on the palladium side. Palladium is mostly Russia from their nickel mines, and then Stillwater mine here in Montana, a couple states over from me. It's one of the biggest palladium mines out.
Right. So, it's could be difficult to get your hands on at times. And, like you say, physical markets and real small markets. I mean, I have to confess, I've never seen any palladium rounds. It's kind of dull metal, right?
Yeah, it's not real shiny like silver, but it's fairly pretty metal. It's if you weren't familiar with silver and looked at it, you might think it was. I mean, it's not really dull, but it's it's a silvery white metal. It's very valuable. I mean, when I was at the Delaware Depository, and John Potts, the founder, took me all through the entire place. It was really quite a tour that I was given. One of the lockers had a lot of industrial grade palladium. Yeah. And I hadn't ever seen that much palladium in one place in my life, and very few people on the planet ever will.
Yeah.
And I got to thinking about it when I got back on the airplane about how much plate of palladium I saw in that, big locker. I mean, this is not like it's, some little home safe that's the size of, a bookcase. But nonetheless, when I thought about it, I started kind of doing some mental calculation. What? They're probably looking like 1/3 of the above ground palladium supply. I mean, it was, and yet, this is just part of the Delaware depository. It's not like we're talking, I want to digress a bit, Kerry, if I might.
Sure.
Try to put the perspective on, why precious metals are called precious. I mean, if you do the thought experiment, and you land on the moon and you get out your telescope and you look on the planet and you look at how many gas stations are all over the planet, okay? Mm-hmm. And you're looking at all those gas stations and you say to yourself, well, this oil must be a really big commodity because look at all these gas stations all over planet Earth. And then if you stop and you say, oh, well, all the gold that's ever been mined in the history of the world will fit under 2 of those gas stations. And all the silver will fit under like 3 of those gas stations. I'm talking these mega gas stations, where
sure.
you have like 16 pumps and the high ride, the ceiling on them is like 28 feet in the air. Okay, that's what I'm talking about. I'm talking about your 2-pump station. But 2 of those will cover your gold market, and about 4 or so will cover your silver market. And think of that ratio of 2 of those service stations versus how many are on the planet. So now stop and think what that tells you about the commodities, oil and gold, or the commodity oil and silver. And ask yourself, how precious are those metals? And the answer is unbelievably precious. And then, of course, if you talk platinum, palladium, you're talking, all those pumps being made of palladium. That's done. You're done with the world's supply. And platinum, maybe, I don't know, I'd have to guess at that one, probably 3 sets of those pumps. It's just not much. It's rare. It's precious for a reason because there's not much of it.
Mm-hmm. Yep. Yeah, it's really rare. And they're not finding a whole lot of new deposits of it either, are they?
No, we did an update in the Morgan Report. We're going to continue in the book about peak silver, and we are going to see an increase in mining of silver probably to 2016 or so for the next few years, and that's it. Oh my goodness, we're mining 1 billion ounces of silver, and that's a lot of silver. I agree, but the peak is the peak. It never gets bigger than that. And then we start down. So it's sort of like, there's people that believe and don't believe in peak oil, but regardless, peak silver is there. And of course, you always have to be honest. I mean, honestly, peak silver theoretical place, 3 years out, for example, could shift depending on the price. I mean, if you have $100 an ounce silver versus $20 an ounce today, then you're going to shift that peak because it becomes economic to get a 1 ounce per ton, 3 per ton. You get a lower grade, it makes economic sense. Good.
Sure.
That's what I'm trying to say. Sorry, I got a little tongue tied.
That's okay. Well, we're wrapping up now. So, okay, just tell us how we subscribe to the Morgan Report. Best place to go?
Sure. Just go to themorganreport.com. On the right-hand side, you have 3 levels of service. There's a 30-day money-back guarantee. So basically the best thing to do is watch the videos on the side, sign up. The Basic Plus service is sort of the favorite service where you get all the videos that we do on the mining trips, any of the shows that I do that I'm allowed to film. I film and put them up on the website. And then I do updates using the Camtasia software. So I'll show you the charts or Kitco's website or whatever I'm looking at and show it to you and talk you through what I'm looking at and why. So that's the middle service. Then there's the mastermind service and the basic service. If you just want information, we provide a lot doing shows like yours, Kerry, and that's over at Silver Guru on YouTube. And then we have a Twitter feed, which is the articles I read and think really important for people to stay tuned to what's going on in the financial markets. And that's at Silver Guru 22.
All right. That's cool. And hey, just go over to financialsurvivalnetwork.com and you'll find the link there as well. And don't forget to sign up for our newsletter. And hey, today I just got my first Bitcoin, David. Wanted to let you know that. A momentous occasion. I got 1/100th of a Bitcoin worth $4.81 from one of our great listeners out there, a guy by the name of Aaron, who's in the Middle East. A hat tip to Aaron and a shout out to him. It really wasn't that hard. I just got myself a wallet And now I get to enjoy the gyrations there. And at least I know that the too big to fails aren't yet manipulating Bitcoin that we know of, right?
That's right. As far as I know, they're not. It does a good job all by itself.
Yeah. It's just like, it was so cool getting it. I got to say, it really was cool. So now I'm trying to figure out how to buy it. And it's a lot harder to buy it online than it is to figure out to get somebody to send it to you. So if anybody wants to send it to me, email address is khl@kerrylutz.com. David, we'll talk to you again real soon. Be well, my friend.
Thank you. Great doing your show.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.